What's up, everyone? It's Scotty with Money Investing. So markets here very flat and slightly down, with the S&P 500 about as flat as it can get. The Nasdaq here slightly pushing higher on the back of Tesla and Nvidia, and the Dow Jones here selling off here on the day. So we are starting to see a little bit of that momentum starting to fade, which I am going to talk about in this video. Nvidia crossing above that $1 trillion market cap, but of course not being able to close at those levels. I actually did a poll during our live stream during market open today, asking everyone how many people believe Nvidia is going to close above a $1 trillion market cap versus how many people believe it's going to close below a $1 trillion market cap. And guess what? 75%, three-fourths of the people participated in that poll said that Nvidia is going to close above a $1 trillion market cap. And that's really where market sentiment is, right? That's a good representation. That's an excellent indication of where the market sentiment currently is, right? Everybody is optimistic. And I'll talk about this in more detail by going over a very small paragraph or small expert from the most important thing from Howard Marks. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. There is a 16% annual discount for 2 more days after May 31st. It is going to go away, so take advantage of it while it's here. You get access to all the buy and sell alerts, options alerts, trade ideas. Right now, we do have a potential trade setup on bond price ETFs called TMF and TLT. We talked about it in our couple videos ago. As the debt ceiling gets resolved, I am expecting yields to roll over and bond prices to start moving back again. And TMF was up a little bit over 3% today. So this is going to be a potential swing trade idea that you again can access with the link down below. And I also did roll over my covered calls on Tesla for a much higher strike price and more premium from those covered calls as well. So first things first, markets here little changed with nothing to show for. Nasdaq was slightly higher, S&P was flat, the Dow Jones also pulling back. And so far in the month of May, by the way, tomorrow is the last trading day of the month of May, and the markets have done really well, especially if you are in tech or Nasdaq. It's up a little bit over 6.5%, with S&P 500 just barely up close to 1%, and the Dow has fallen 3.1%. Just goes to show how narrow the leadership really has been. And Andrew Smith, chief investment strategist at Capital Advisors in Dallas, says, and I quote, "We're not seeing any signs of broad participation. We're not seeing signs of early cyclicals on top of AI either." So again, we've talked about market breadth, we've talked about the concentration, we've talked about the narrow leadership, and that continues to play out on the back of this momentum from artificial intelligence right now. The debt ceiling bill appears likely to pass House Rules Committee, so that's I think going to be scheduled for vote on Wednesday night. So we're gonna again pay attention to it. June 1st is literally gonna be on Wednesday, I believe. Yep. So actually Thursday is gonna be June 1st. So June 5th is what the date is, the X date from Janet Yellen. So again, we're gonna be paying attention to that and how the yields move and how that reflects the bond price ETFs as well. So Nvidia crosses into $1 trillion market cap before giving back on some of the gains, and the company needed to hold about $404.86 to open at the $1 trillion valuation. So even though it did trade above that level, it closed below that level, thereby some investors taking profits. And Josh was one of them. So Josh Brown said on why he sold 25% of his Nvidia stake, and he's a smart man. And again, we have to make that realization that when everyone is optimistic, everyone is euphoric, everyone is all about prices are going to keep going higher, they can't go any lower, is when the risk is at the highest level. Okay, we have to understand that because, this, by the way, are my Tesla covered calls. Again, roll them out, just giving you an update. So they're already up close to 8%. Again, access all these alerts down in the comment section below. There's going to be a link. Now, this right here is something that I shared with all the community members in the text channel and mentioned that be mindful and aware of the cyclicality of the market. It's important to take the temperature of the market and understand where we currently are. And this is a nice excerpt from the most important thing on market cyclicality. So if you really just read, you can kind of make some correlations. You can kind of connect the dots on where we are today versus what's been written in this book. When people feel good about the way things are going and optimistic about the future and their behavior is strongly impacted, they spend more and save less. They borrow to increase their enjoyment or their profit potential. even though doing so makes their financial position more precarious, and they become willing to pay more for a current value or a piece of the future. Now, this may not be true. Like, I mean, they spend more than and they save less, or they borrow or to increase their enjoyment. That may not be true because of the higher interest rate environment, but I think that's last line, and they become willing to pay more for future value or for current value or a piece of the future. And people obviously feeling good about the way things are going, more optimistic. It's a very, very interesting environment right now, which I can definitely argue is very similar to what's being talked about here. And all of these things are capable of reversing in a second, he says. One of my favorite cartoon features, a TV commentator saying, everything that was good for the market yesterday is no good for it today. And finally, he says that cycles are self-correcting, and the extremes of cycles are a result of people, largely from people's emotions and foibles, non-objectivity and inconsistency. And cycles are self-correcting, and their reversal is not necessarily dependent on exogenous events. They reverse rather than going on forever. And something that I have literally talked about on the channel so many times. It's kind of crazy how this book has so many things that we have already talked about on the channel. Patience, let the price come to you, let the opportunity come to you. And then, of course, things like, that these are not going to go on forever. We have to account for risk. We have to, make sure that we understand risks properly. As price goes up, risk goes up. There's a lot of things that Howard Marks talks about, that we have already discussed on the channel. And he says, because trends create the reasons for their own reversal, thus, I like to say that success carries within itself the seeds of failure, and the failure the seeds of success. You can't predict, you can prepare. And again, this was from back in November 20th, 2001. So we're going back 22 years when this was written. And look, the reason why some of these things are timeless, and it's important for me to address this, because every time I talk about risk, everybody or some people say, hey, this time it's different, right? Because this is a new technology. This is a new normal. This is a new era. This is a new something, right? This is new, right? That's always the discussion. That's always the argument. But is it really though? Is it really? I mean, the markets are always driven by humans, right? They're always driven by our decisions. Our decisions will always be dictated by our emotions, right? Our emotional intelligence. The analysis can be the same, right? You and I can make a same analysis on the same stock, but we're going to react very differently, right? And the reason is because you and I possess different sets of emotional intelligence skills, right? And when you aggregate that among hundreds of millions, if not billions of people around the world, it's all behavioral patterns that repeat over and over and over again, right? So no, this time is not different. It's just like every other time. Yes, we are in a different time period. This time it's AI. Previous times it was Bitcoin or the tulip mania or the housing bubble or something else. But the behavioral patterns always repeat themselves because humans repeat themselves in the way they behave. And markets are nothing but an aggregate of humans and human behavior, right? So to say that market can never be wrong is to say that humans can never make wrong decisions, which is just absolutely false. We make wrong decisions all the time. Heck, I just made wrong decisions waking up this morning, right? So that's what we have to understand, is that even though the argument for this time is different is somewhat reasonable to make, but it's not really, okay? Evaluations almost always matter. Risk and reward always will matter. And we have to address these things. Otherwise, we're just kind of opening ourselves up to huge amounts of potential downside and huge amounts of risks. And just being blindly optimistic or bullish is just not the recipe for investing success over the long term. And just like it's not blindly being bearish all the time is not an investing successful strategy either, right? Got to have a balanced opinion and got to be objective, really, and take the temperature of the market and see where we currently are, right? And if you feel things are too hot, if you feel things, people are getting too optimistic and everything's just driving up because of euphoria, that's the time to kind of take a step back and reevaluate where we currently are in the market. And you can see that obviously a lot of stocks here, once again, pushing higher. Tesla, Nvidia, Intel, Qualcomm, a lot of these companies pushing up, with some of the other sectors moving down. This right here, again, very, very flat market. This is the last 1 month. And you can see how we have less concentrated more towards the top left of the screen, with healthcare, financials, consumer defensive, energy, industrials kind of struggling. So money really has come out of those sectors and gone towards the top left of the screen, with Nvidia just rallying over 28%, Apple, Microsoft, Meta, Applied Materials, Lam Research, Clack Corporation, ServiceNow, Amazon, Tesla. I mean, they're all pushing higher at the moment, even Google. And this is, I believe this is the last 3 months. And again, you can see how much weakness there's been in other sectors and just money being plowed into technology, comm services, and cyclicals. And this right here is year to date. So it is starting to become more overcrowded, right? It is becoming overcrowded in tech, no doubt about it, because there's a lot of money flowing into these opportunities. So there's just too much capital chasing too few opportunities. And that's what happens when prices go up like this. So this right here, again, is the daily performance, tech and cyclicals and real estate kind of leading the way. In the last 1 week, take a look at this. Last 1 week, technology is the only sector that's actually up. Everything else is down. In the last 1 month, only 2 sectors, tech and communication services, pushing higher as well. This right here, lean hogs, feeder cattle, live cattle pushing up. Natural gas, coffee, orange juice also pulling back here on the day. Then we got Bitcoin just a little bit over 27,000 and Ether a little bit closer to 1,900 at the moment as well. So going over to the market, S&P 500 here, again, it is trading at above that 4,200 level. So that's pretty good. Yeah, right. So closed flat and it's trading above that support. Next target and resistance is going to be at 43.30. So that's the level to pay attention to if this momentum, if this rally, of course, continues. And we, of course, have support level is going to stay put somewhere between 41 and 4,200. So those right there are going to be some levels to watch for S&P 500. So 41, 4,200, that's support inside that green rectangle. And that next resistance is going to be at 43.30 for S&P. Talking about the NASDAQ, and NASDAQ here really approaching that 13,200 level. That's a resistance where exactly we got rejected going back as far as August of last year. And of course, not to mention RSI, MACD, very, very overbought. And getting up to that level. Now, I also want to address one thing because one of the members, talked about it during our live chat. And again, full shout out to him. This is not, me being defensive or kind of, criticizing them or anything, because they mentioned that, they, because of these overvaluations, because the market's moving higher, they halved their position earlier. And as a result, they missed out on some of these rallies. So the point that I'm trying to make here when we talk about this risk and reward is just because the risk and the reward is unfavorable doesn't immediately make it a sell, right? Because I, for one, have not sold anything yet. I'm simply holding on to the current positions. I'm just not a buyer in this market, right? So there's a difference, right? Just because valuations are overextended and the markets are overbought and we're just seeing these insane rallies, doesn't immediately make it a sell signal, right? If you are in it for the long term anyway, if you're in it for the, let's say, next 3 years, 5 years, 7, 10, 20 years, then it doesn't matter if the markets are overbought today or tomorrow or a week later, right? You're in it for the next 5 years anyway or 7 years anyway. So the point is that I am willing to hold even at these prices, but I'm still willing to prepare, right? So if you go back to what was discussed in that book, at the end, he talks about you can't predict, right? I mean, you can't predict where the market's going to go. Even if it's overbought, it can get even more overbought. Even if it's overvalued, it can get even more overvalued. So you can't predict. All you can do is prepare. And how am I preparing? Selling covered calls or simply holding on to the shares that I have. Oftentimes there's not a lot to do in the markets anyway, right? Most of the times you're just kind of sitting on your hands waiting for the markets to give you the opportunities, right? If you find yourself forcing your opportunities onto the market, or if you find yourself rushed into the market, take a step back, right? Let the opportunities come to you. That's more important than you having to make so many decisions every single day or being forced to make decisions, right? So that's the point that I'm trying to make. Just because the markets are overbought here, overvalued, I'm not selling aggressively. I'm not going all in on cash. I'm instead hedging my downside by selling covered calls, or I'm simply holding by understanding the idea or understanding the fact that the markets, based on the sentiment, can go even higher, right? And I'm in it for the long term anyways. I don't care about the short term volatility, but I'm still going to use that information to protect my downside by selling covered calls. So if the markets do pull back, I'm prepared. That's the whole idea. I'm not predicting, I'm preparing for when the markets do pull back. That's where the covered calls come in. So resistance is going to stay put at 13,200. That's the level to watch, and support level is going to stay put at 12,200. So this right here is going to be that level to watch if and when the markets do pull back. That's going to be a very strong support level for the NASDAQ moving forward. Talking about Apple here, and Apple really just pushing higher, almost up to a new all-time high, getting up to 177, up another 1%. And this candle kind of freaks me out a little bit with this inverted hammer candle. It doesn't look too good. And resistance obviously staying put at 177. So we are at that resistance right now, and support level is going to be at 157, $158 for Apple. Talking about Amazon, and Amazon on the day also pushing higher, up another 1.29%. So next resistance and target's going to stay put roughly around $129. So this right here is going to be that level to watch for Amazon, and support level obviously is going to stay put at roughly around $103, $104 per share for this company. So we're kind of like in the middle of that range. Next target, like I said, 129. That's the one to watch, and support level is going to stay put at 103. Tesla, on the other hand, also a very strong day, pushing higher, and $208 to $209. So inside this red rectangle is going to be that level to watch. And right now we are inside that level. Of course, 200 SMA, we're starting to break back above that level. And resistance, like I said, is going to be $208 with support staying put in the 170s, 175. And again, that's exactly what I'm doing, right? Selling covered calls to hedge for the potential downside. And I'm happy to let go of my shares at $205, $210 as well. So those are some levels that I am paying attention to for Tesla. Next up, we've got NVIDIA. NVIDIA here. Again, this candle doesn't look super great. It is an inverted hammer candle. Usually happens towards the end of a trend. But again, I'm not going to say anything. Valuation now at almost $1 trillion, of course, 990 billion. And if you consider the sales, it is trading at roughly around 25 to 22 times sales, which again is an insanely high premium for NVIDIA. And whoever bought at $419, just close to $420, good luck. I really, really wish you make money, but it says the probability is just very, very low. So keep that in mind. And again, no doubt, overbought extremely. 85 RSI, MACD's overbought as well. And support level is going to stay put down to 347 to as low as $290 per share. Talking about Advanced Micro Devices, and AMD here also selling off. It had quite an interesting candle, right? Gapped up and then sold right back down. And again, very, very overbought RSI MACD. So just trading as high as 125. And at that resistance, this right here is going to be that level to watch as a resistance for Advanced Micro Devices. PayPal had a pretty decent day, up over 3%. So getting that move back up, $62, and resistance and target's going to stay put at $66 per share. I do have a couple of cash secured puts on PayPal, so if it does expire in the money, then obviously I will have another couple hundred shares on PayPal, but resistance is going to stay put at $66, $67 with a support staying put at $60 once again for PayPal. Talking about Square, and Square just consolidating sideways, not really moving all that much, down about 27 basis points, rating a little bit under $59, and this right here is going to be that support level to watch for Square, and resistance, of course, all the way up to that 200 SMA, sitting roughly at around $66, $67 per share for the company. Talking about Meta Platforms, and Meta also slowly and steadily kind of filling in that gap here, and we are now up to $268 per share. Again, the candle doesn't look super great considering how overbought the price and the RSI, the volume, everything is. So I'd be very careful here, obviously. And again, I've got a couple of covered calls on Meta as well for potential downside protection. Support level is going to stay put it down $236 for Meta as well. Talking about Netflix, and Netflix here had a huge breakout, up over 3.7%, and getting up to $397, almost at $400 per share, and just getting a lot of momentum on the back of this breakout from the symmetrical triangle as well. So valuation is a little too high. Well, I should say very high for Netflix. And next target is going to be at 458 for this company. And we're going to go ahead and turn this level into a support for Netflix now, moving forward at close to $380 per share. Talking about Google, and Google here on the day also just flat, very much trading sideways, down about 64, 63 basis points. Support level is going to stay put at 123. So this right here is going to be that level, and resistance is going to stay put at 131, 132 for Google moving forward. Next up, we got Microsoft, and Microsoft here starting to pull back a little bit as well. Very, very overbought. Next resistance and target at $344. So this right here is going to be that level to watch for Microsoft, and support level is going to stay put at $312 per share. And finally, we got Shopify, which was slightly down about 1.8%, just trading a little bit over $58. Support level is going to stay put at roughly around $54, $55 per share for Shopify. So one last thing I want to mention is that, when we think about markets, cyclicalities and the extremes, and, we oftentimes we think about this trend is going to go on forever, right? If markets are pushing higher, we often think, hey, it's going to go on forever. When it's going down, we think it's going to go on forever as well on the downside. And the reason for that is the recency bias, right? We put more weight on recent history as opposed to past history. And one thing to remind yourself in that environment, in that logical sense, is that let's just say that every single person, 8 billion people in the world, end up buying that stock. Okay? Let's say that Nvidia, for example, 8 billion people end up buying Nvidia. And they keep buying, they keep buying, they keep buying. Eventually, every person on earth will own Nvidia, right? If all 8 billion people have it, who's going to buy that? That's the question that you need to answer yourself, to remind yourself that nothing lasts forever. Nothing goes on forever. Not on the upside, not on the downside, right? Downside, unless the company is really, really bad. I mean, it's like on the brink of bankruptcy. Yes, it can go down all the way to zero, but even then, it doesn't last forever, right? It's gonna literally just go to zero, and that's it. So that's one thing to remind yourself, is that no trend, no hype, no momentum, nothing, not just in markets, but in general life, nothing lasts forever. Nothing is permanent. So I hope you guys enjoyed this video and find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. 16% discount until the end of this month. As always, happy investing. I'll see you all in the next video.